Human behavior flows from three main sources: desire, emotion, and knowledge. That's a quote from Plato. Let's set the scene. You arrive in a place, a city or country that's on your bucket list. You're anticipating a once-in-a-lifetime experience. Excitement mounts as you pick up the keys to your rental car. You know where you want to go and you know what you want to do. You get to the rental car exit kiosk, and luckily, there's an attendant who speaks broken English. They wave their hands and say a few words, half inaudible. You smile and you nod knowingly, while inside your stomach churns, and you say a silent prayer. What's missing? You forgot your map, your GPS, and other details that would help you to have a successful adventure. So, what does this have to do with real estate? In my opinion, everything. Many of us, full of excitement and anticipation, often jump straight into purchasing real estate without having the right decision-making tools. Buying real estate. It's a big deal to you because it's not something you do every day. And it's a big deal for me as I want you to have the right information and tools to make informed decisions. When I first purchased my home, I was one of those people who wanted to jump in. However, I was blessed to have trusted guides, my father and the selling real estate agent, who helped me navigate the home buying process with confidence. By recording a series covering key aspects of the home buying process, I want you to be comfortable with your decisions and help you to avoid potential missteps by just jumping in. The aim is for you to know more, be prepared, and build confidence. Today, we're going to be talking about having a trusted guide and knowing your numbers, aka mortgage pre-approval. I believe that it is critical for home buyers, both new and experienced, to have a trusted team who can help guide you through the home buying process by listening to you and understanding your goals, helping you understand your financials as related to real estate, and thus build client confidence as you move through the process. My guest today is Lorne Andrews. Lorne is principal broker with Dominion Lending Centers Expert Financial. He has over 25 years of experience in the real estate industry. He was a broker of record, a real estate instructor with Ontario Real Estate Association, and he's currently an independent mortgage broker. So Lorne, thank you for joining me here today.
Thank you very much, Nicole. I love that intro.
So I'm just going to go ahead and jump right in, like I like to do.
Yeah,
so
this
Lorne,
is great.
You have extensive experience in various aspects of the real estate industry, as I introduced. So if our listeners are looking for a real estate agent, what qualities should they look for when they're selecting one? And why?
So for a real estate agent, that's a really great question because, statistically, there's a lot of you out there. And it's interesting when I sort of reflect on my experience when I was teaching realtors and they were going through REIA college to get their licensing. I mean, a lot of them were in it for different reasons. Some were thinking it's a quick way to make money. Some weren't too sure why, they were just trying it out. And then there's others that were really passionate about trying to impact people's lives, right? And I think that at the end of the day, when I'm choosing a realtor, I am looking at somebody who is invested in the industry full time, okay? I wouldn't have a heart surgeon that just does heart surgeries on weekends because they do something else during the week. I would choose somebody that's invested up to date with everything that's going on with the industry, up to speed with everything, and really in touch with the connection that you need to have, understanding just what you talked about, the GPS, the emotions that happen when you are buying your first home or even your second home. I think there's always emotions that that happen when real estate's biggest investment that you're ever going to make, right? So, so you really need a trusted professional. You really need to kind of do your homework, do your research, do your Google searches, ask for references, things like that, because I think it is really important that you connect with somebody that's going to be honest with you too, right? And there for the long term, right? It's especially with real estate in my industry and on the mortgage side, and I think that on the real estate side, it's about relationships that will last a lifetime, right? And because first of all, it's getting into your first home, but then maybe it's your investment property, or maybe it's upgrading, things like that. There's things that will happen throughout our lifetimes that will change, and to have somebody that you trust is important. So I think trust is number one when it comes to real estate, for sure.
So what someone needs to look for in a real estate agent is someone who is knowledgeable, knows their stuff, they're up to date on the current market. They are relational. So it's not about this one transaction, one and done. It's about someone who really wants to be there in the long haul. It could be your first home, second home, investment property, helping kids, grandkids, relatives, etc. So just having someone who has that commitment to be there, to be your kind of emotional rock and your GPS in the long run from a real estate perspective.
Yes, I would say you just summarized it beautifully.
Now, Lorne, here's the question that I get from clients all the time. Can you provide me with some clarity on the difference between a mortgage specialist, so someone who is employed by a financial institution, and an independent mortgage broker or brokerage? Yeah,
I'll give you an overview in terms of the roles, and then when you would use one or the other. So when you're a mortgage specialist with a institution, like a bank, let's say whatever bank it is, I'm not going to name names. Basically, you are trained. Hopefully you're trained over time, and you start to work in the mortgage department. The difference between, say, a mortgage agent or a mortgage broker that is independent versus somebody at the bank is, when you're independent as a mortgage agent or mortgage broker, there's licensing involved, okay? Where you actually have to, take the course, follow the guidelines, pass this course, get certification and everything else. So, whereas on the bank side, there's none. So basically you can, graduate from a teller. So now you're doing mortgages. On the other side of that, and still there's some people at the bank that have been there for many years, that are very experienced, that are very good at what they do. Okay. To take that a step further is when you are dealing with a mortgage advisor that is at the bank, they are really trained in what that bank has to offer for you. Okay. And I think that many, many years ago, people used to think of going to a mortgage broker or a mortgage agent was you would go there if you couldn't get a mortgage from the bank. That was the whole thing. It's, oh, geez, I can't get a mortgage here, so I got to go to a mortgage broker. And that's not true. In fact, our one brokerage does more mortgage volume than three of the big banks combined, right? So, and a lot of it is bank business. So when you're dealing with a mortgage broker or mortgage agent, they're not connected to any one lender. Okay, so when we have somebody that's in front of us, they're going to fit in a certain way, and not everybody is straightforward. There's people that are self-employed, people that may have credit issues. There's other challenges, down payment issues, things like that. That if you don't fit in that bank box, sorry, we can't help you. Whereas we know, okay, this could fit in that bank box, and we would take it to that bank, right, if that's the case, or we can move it over to an alternate lender or a different type or a different A lender that has different policies. So when you're working with a mortgage agent or mortgage broker, we really deal with 30, 40, 50 different lenders, including the major banks as well. But it allows us to really define in terms of where you're trying to get to make sure that you're in the proper mortgage that's suitable for aligns with your goals, okay, and to make sure that you're protected and you understand any of the risks involved as well. When you go into some banks do different types of charges on the home where the penalties could be a lot higher, things like that. They're not going to tell you, here's 3 different lenders we have to choose from, and here's the options on each one. And I think that it's interesting. I had a conversation with somebody on the weekend, and she deals with a blue bank, we'll just say, for example. And she says, I've always gone to the bank. Like, why would I go to a mortgage broker?
Right. Exactly.
And I said to her, I said, well, like, what do you think? Like, what is your hesitation? And she goes, well, she says, I'm going to get a better rate if I go to the bank, right? It's like you probably get people say, I might get a better deal if I go to a listing agent instead of the listing agent. It's like, to me, that's like when you're getting a divorce and using your spouse's lawyer to help with your divorce. You know what I mean? It just doesn't make sense to me, right? And so I explained to her, I said, you have to understand how mortgage agents, mortgage brokers get paid. So all these lenders, right, are all fighting for your business. They want your business badly, right? Mm-hmm, mm-hmm. And when a mortgage broker, mortgage agent takes a mortgage to the lender pays a commission to the mortgage broker, and it's based on the amount of the mortgage. It's not based on the rate or any other terms or anything else, just on the amount, right? And they all kind of pay us the same thing, right? So it doesn't cost, the client or the buyer anything to use a mortgage broker. You're leveraging the relationship that you have with all these different lenders to access lower rates or terms. It's not always about rate all the time, but get the right terms in terms of what you need in your mortgage. For example, last year I probably had about 15, no, maybe not 15, maybe about 12 Scotiabank employees come to me to get their Scotiabank mortgages, because I'll get better terms they would as employees of Scotiabank, for example, right? Same thing with TD. We get the same discounted rates as employees do, but when they do it through there, it's like a taxable benefit. So they come to a mortgage broker instead. It doesn't cost them anything. They're taking advantage of the discounts that were being offered on these rates, and we can give them options, right? So you don't always have that option when you walk into the bank, and sometimes when somebody, we're going to get more into pre-approvals and stuff like that shortly, but when somebody walks out with, I've seen people walk out with, hey, I got this from my bank, I've been looking for a home, and then they send them to me to look for a second opinion and say, okay, yeah, that lender has these sort of policies, but let's go to this particular lender, better rate, probably same rate, whatever, but all of a sudden now they qualify for, $30,000 or $50,000 and sometimes $80,000 more than they thought they did from when they walked into the bank. So I think hopefully that summarizes kind of, where it is. I mean, there's other nuances between the two of them. But if you went to the bank, nothing wrong going to the bank, but get a second opinion, go to their mortgage rate. It's not going to cost you anything. But you may have more opportunities for yourself by exploring somebody that's familiar with all the policies of all the different lenders and seeing what's the better fit.
I think that's the crux of it. It's, yes, go to your bank or your financial institution that you're used to banking with and you have a relationship with, but explore opportunities with an independent mortgage broker who has 30 to 50 other institutions where they can look for you. And also, there is no charge. Because I think that's one of the things that's out there, that people think that there's this charge that is applied to them if they use an independent mortgage broker. So I really appreciate you clarifying that and giving some perspective in terms of working with a mortgage specialist at a financial institution versus an independent mortgage broker.
Yeah, and I think with regards to charge, like sometimes they're whenever there's broker fees, it's usually involved when we're doing secondary type financing, like private financing, second mortgages, things like that. But when you're talking about your first mortgage and everything's good, then you're really not dealing with any type of fees whatsoever. It's just you got to do yourself do yourself a favor. Make sure you check in with your mortgage broker.
And they're your GPS. They are a tool that's available to everyone to use to help strategize. Because I know based on, the discussion here, you help to educate them in terms of what's available to them, what they can do, their options, so they understand what's out there, what's possible, and then they can make an informed decision based on the information provided.
Yeah, you're absolutely right. And it's kind of like the cart before the horse too. Like I've sometimes I get these calls from a realtor say, hey, listen, can you get my client pre-approved? For the last 3 months, I've been looking at these homes with them. Mm-hmm. And when we go through it, they're not qualified for the price level that the realtor has been, walking around with them. So that's where it comes to the, being with an experienced realtor that can kind of put in order where you should be, getting those check marks done before you get to that next stage, right? Because for you, there's probably like you would understand, and even as a client or somebody listening, for you to walk into a home and say, I don't know if I like this home because I don't even know if I can afford this home or if I could qualify for a mortgage. So your mindset isn't there. You need to know your numbers. You need to know, and then it's going to change the feeling when you walk into a home, and it's going to allow you to love that home to the extent where you're ready to make an offer, if that's the case.
Exactly. Start at the beginning. Know your numbers. Know what you want. Have a big picture view of where you're going to go before you start driving off somewhere.
Oh yeah, for sure.
All right. So now let's get to some nitty gritty, in terms of a pre-approval mortgage. And just in terms of what it is, first of all, and why it's important. And I think you touched on this a little bit just at the end of that section. What are the consequences if we miss this step? What are some of the things that could happen?
So I think it's important to understand what a pre-approval is, because some people think, oh, I'm pre-approved is basically guarantees me that I can get financed. And it takes you a step closer, but not necessarily. And in fact, there's lenders out there, and a lot of the banks are like this too, that they'll give you what's called a pre-approval, which is really just a rate guarantee. They're saying, okay, thanks, we got it. You just did a quick little application. Here's your amount, and this rate is guaranteed for 120 days, right? So, and that's what they're getting. They think, oh my goodness, I can go off and do it. But then a lot of times the lender doesn't really underwrite, which is basically working on verifying all the income and everything else until there's actually a live deal, right? And if the live deal, normally, you'd be protecting clients by making conditional on financing and everything else. But it doesn't necessarily mean that they're approved, a pre-approval. So, and this is where it's important to understand. So on our side, we need to remove the obstacles before we even approach those obstacles. So what we do is with our pre-approvals is we request we request all the down payment documents, income documents, just so we can forecast if there is anything we need to navigate when we are approaching the point where you're actually going to make an offer, and then it becomes like a firm deal or a deal conditional on financing and things like that. And it might include things like, where's the down payment coming from? And is it coming, because a lot of times I see it happen where down payment is coming from overseas. And, a lot of lenders have a restriction that it has to be in a Canadian account for X amount of time. Is it coming from a gift from a family member, or are they a family member? Because it has to be like an immediate family member, things like that. Income, a lot of times, I see people say, they'll walk into the bank and I say, they make X amount of dollars, but they're self-employed. And then when those documents come in, they say, no, that's their gross amount. That's not the net amount that they declared, because the major banks will say, no, we need the net amount, not the gross amount, right? Stuff like that. So underwriting the income and everything else to make sure that, we ask for the job letters, because sometimes there's wording in the job letters that says, maybe they're not guaranteed hours or things like that. So we do on our side ask for a lot, up front because we don't want you to be shocked later on. So by the way, okay. And it's interesting that, even on a bank. So for example, you can have a pre-approval from any particular lender. And if you're putting less than 20% down, that's considered a high ratio mortgage, okay, which basically means it's insured through CMHC or Sagan or Canada Guarantees, 3 insurers. And basically, when you put less than 20% down, there's an insurance premium that gets added onto the mortgage. That's on behalf of the bank. So the bank actually pays the insurance companies, add it into your mortgage for you, but it allows you to buy a home with less than 20% down, okay? The caveat to that, though, is that you need 2 sets of approvals. You need the bank to say, yeah, okay, we're good with it. But then you also need the insurer to say, yes, we're good with it too. And it has happened where the bank says, yeah, no problem, we love it, he's a great client, whatever. And it goes to the insurer, and maybe there's an issue with the property. Maybe the status of the condo or everything else. The insurer says, no, sorry, you know what, we're not going to be financing this one. And the lender has no recourse. Like there's nothing, if the insurer says no, the lender, doesn't matter if the lender said yes. And the thing is, the insurers do not do any pre-approvals, right? So there's always a higher level of risk when you have sort of less than 20% down, depending on that type of property and certain conditions. Mm-hmm. And that's why we really have to, go through and go through everything just to foresee if there is any type of risk that we need to be aware of. And if there is ever a risk, we'll always recommend, make sure you leave the condition on financing in that offer. Okay.
Exactly.
Yeah. And there's times where we might say, you know what, no problem, you can waive that, right? Just because the file is so strong, or the property and everything else. But I get people, sometimes they say, their goal is, they say, we know we got it, right? So the bank said we're gold, everything else, we don't need to put a conditional financing. And then all of a sudden there's no conditional financing. The lender sees the property and is kind of leaning to one side. It says real handyman special, whatever. And they say, we don't like this property. Okay, we're going to pass on this property. We'll get the next one. And they're like, but we made the financing. And lender's like, well, we're not comfortable with that property, right? So it's not always about you. It's not always about the client. Sometimes it's about the property too. And that's why with those pre-approvals, they don't have the full picture together yet until we actually have the approval, right? So we actually have an offer, right? And then we put it all together.
So with the pre-approval, I'm going to stay there for a minute in a different scenario. Mm-hmm. What we're seeing, or what we had seen in the past year or so, and probably I anticipate maybe in the near future, bidding wars, and where people are removing that conditional on financing.
Yeah.
And maybe in the situation, say there's 20% down. They're not in the area where they need to have mortgage insurance, but they have technically they should have the 20% down. But then there's something that happens. Can you give a little bit of explanation in terms of what that challenge could look like?
So and we're well aware of where things were, and they've kind of come back, and now it's kind of simmered down a little bit again, I see. So it's you'll see it go like this, and all of a sudden, you do go through offers, and all of a sudden there's 4 other offers, 5 other offers, and the seller is thinking, okay, I want to, and for me, it's the wrong mindset, right? Because the seller is thinking, I'll take the one with 0 conditions because that means it's a firm deal, right? But here's the risk. So let's say, for example, I'm the buyer and I say, okay, I'm going to waive my conditions, and I'm up against 3 other offers. I've made an offer of X amount. Let's say the property is listed at $600,000 and I end up buying it over the asking price for, say, $650,000. Okay. So then it goes off and we send it to the lender. Lender's going to say, it's not coming back at the value. We need an appraisal on this property, right? And then the appraisal comes in, and let's say it's not 650, let's say it's 600,000, which is close to whatever everything else sold around. What happens? Okay, so where do I get that extra money? Well, the problem is the bank's going to say, we're going to give you the purchase price or the appraised value, whichever is the lesser of the two. And that's what we're going to base the purchase on. So so if I have 20% down on 650,000, and now I can only, it's now down to 600,000, I have to make up that difference with my down payment of that 50,000. So when I have 20% down, like sometimes it's okay because there's a little bit of a buffer, and in worst case scenario, then I go to a high ratio mortgage as long as that property is less than $1 million. Like anything over $1 million is not, high ratio goes up to $1 million. Anything over, you have to have 20% down regardless. Okay. But if the property value comes at less, I have to make up that difference. Right. So that's why the other thing, especially during conditional periods, we try and jump on getting the appraisal. If there's an appraisal needed, we get on it right away, because I'd rather find out if it's a 5-day conditional period, let's find out if the property value comes in. Right. And the property value comes in, that's just one more thing we don't need to navigate anymore. And that's important, right? You need to know that. So, and it has happened where people, and it's happened to Nicole with a lot of the new build projects, right? So people have bought it in 2021 when it was a peak, and now they're starting to close, and now the appraisals are coming in. And, some of them, some of these houses, they were purchased at 1.2 million are coming in at 1.1 million now, which means somehow they have to come up with an extra $100,000, right? Which is, not everybody has an extra $100,000 sitting in their closet somewhere, right? So, those are and hey, listen, and that's why it is. I don't want to describe it as a minefield, but there's a lot of different things that could happen, and that's why it's so important to have your right team on your place to help you navigate around this stuff.
Exactly. No, thank you for that. I really appreciate that, and it kind of sums up the critical importance of pre-approval. And I think you mentioned kind of the 3 pillars in terms of the down payment, your income, and your credit score. Mm-hmm. So and also the importance of having a trusted advisor, your real estate agent, your mortgage broker, mortgage specialist, someone who can really walk you through your scenario or particular situation and provide you with those options before you even go out and start looking, before you jump in and start looking. So I think that's a lot to digest for now, and we'll continue our discussion next time. So just to summarize, as I mentioned earlier, a real estate purchase is probably the biggest purchase that you will ever make through your life. And before you jump into the home buying process, be sure that you have a trusted advisor, be that a real estate agent, a mortgage broker, a mortgage specialist, and make sure that you are informed and take advantage of expert advice. Somebody who is up to date on what's happening out there, someone who's knowledgeable, dedicated, and not just looking for a transaction, but looking to build a relationship with you for now and through the future. So also know and understand your numbers. Know your numbers. That's key. And know what you can afford. Make sure you avoid missteps, navigate your own real estate GPS using that supported advisor. And Lorne, before we go, how can listeners contact you?
Well, Nicole, they obviously if they reach out to you, you can actually pass them on to me as well. They can visit my website at optimalfinance.ca. Just make an appointment. And I would say that I don't think it really matters to an extent of where you are in the home buying journey. If it's a year away, 2 years away, 3 years away, I think it's important when we talk about that GPS. It's important because sometimes it's not just the GPS to get into the home. It's the next step to get closer to get into the home. And, I do have a lot of people say, really want to get in a home, but, I messed up on my credit last year or whatever. So what steps do we need to take to help the credit? Like, things like that. Let's start, taking those steps. If there's issues with down payment, what are the strategies of down payment? How can you leverage other programs and things like that, RSPs and other things that can help contribute to down payment? Like there's so many things, elements and stepping stones. So yeah, I would say that, and the really good thing, like if they connect with you early, is that, even if it's a year away, 2 away, you can educate them along the way, right? And so it's nothing's, you're not fire hosing them all within a short period of time. They say, yeah, Nicole's taught me about that. And, I'm familiar with that. And I know what to expect during multiple offers. And I know this, we've covered this. And so they've been, trained in a way. It's like buyer boot camp, right? And you get ready and now you're ready to go.
Like what you hear? Follow today. Don't forget to share with family and friends. Have suggestions for future topics? Let me know.